Hello, Uncle Jim. We've had a rough time in the markets lately, and you may be wondering, should you get out of the market? Should you sell some of your stocks? Should you stop investing? Well, I think those are probably the biggest mistakes you can make at this time. I think now's the time to actually make some purchases and do so by selling puts. I think selling options is one of the greatest ways to make passive income. And today I'm going to share with you not just how to sell puts, but also how to find some really good bargains. I found several bargains. I'm going to share those with you. And I'm also going to talk about some steps that you can take to protect yourself, especially if you have some in the money options. So stay tuned. I think you're really going to enjoy what I have for you. Now, I typically like to start out by just giving a market update. It definitely has been a rough week. We did end yesterday with the market being up. I believe it's still down. This is Thursday around 3 o'clock or just before 3 o'clock. And I believe the market's also down today, all the markets, that is, or all the indexes. And I think that's primarily because of the employment that the Fed, there's a lot of worry that the Fed doesn't like the employment doing too well or too many people looking for jobs or finding jobs, and that, they kind of want more of an emphasis that, companies are letting people go. And I don't necessarily agree with that. I think that'll happen independently. I do feel that, what the announcements they made, I think it was last week, it might have been 2 weeks ago, related to keeping rates higher for longer and doing maybe instead of four adjustments or reductions, they're only going to do two potentially next year, and it may not be till middle of the year. Now that can change on a whim. A few bad indicators where it looks like we're going into a deeper recession, they could be changing their mind all over again. And the debt on the interest on the debt is through the roof. It's to the point now where we can't have these high rates for a really long period of time. So I do think they are going to reduce them, and I'm thinking, again, they may do them sooner than they realize. With the auto union striking and the auto companies having issues. Also, oil dropped majorly recently in the last couple of days. There's been like XLE is way down, ExxonMobil is way down, all the oil companies are down. And I believe it's something along the lines of a 4-week low. So that should be good for inflation. Everything uses oil in the energy sector to build their products. So that should potentially have an impact on lowering inflation. We can only hope so. So I do think a lot of what's been going on with the market is related to that. It's related to the Fed and, the thought that they're going to keep rates a lot longer. And that has been hard for banks. I noticed other than oil companies, also the banking sector, anything related to banking has also been hit hard. And that's because of these higher rates have a pretty drastic impact on things like commercial property. And, most of the banks hold those kinds of loans. So I do think that's why the market is down. And I do think, again, if the Fed comes out and changes their guidance, we may get a big bounce in the market, and I wouldn't be surprised. Literally last year, if you look at around the exact same time, we were again hitting lows. So we're back to that same level, especially in IWM or the Russell 2000. It's right near where it was at this exact time last year. I believe the S&P 500 is a bit higher. And that's probably because of the top 6 or 8 companies like Microsoft, Google, Meta, NVIDIA, Tesla, the 5 or 6 or 7 largest companies haven't come down as much as the rest of the market. I'm seeing some really good bargains, and I'm going to talk about that at the end of this video. But some great opportunities that I haven't seen in a long time, and even better than last year, because some of the companies I wanted to invest in never got down to a price that I really liked. And there's a few now that are getting into very interesting territory. So I'll talk about that at the end of the video. So that's the basic update I wanted to give about the market. Do I think we're going to continue to have, down days? I think I think we're going to get a bounce, and it may be sooner than a lot of people think. I've noticed a lot of my members are panicking a little bit. They're not used to this. I've been through this for many years. I've been selling options, especially covered calls, going all the way back to 2007, 2008. So it's important not to panic. But you can take some steps, and I'm also going to talk about those steps you can take in this video, and steps I'm taking for some of my positions that are in the money. So with that being said, as always, you know, what's key is picking really good companies. And the first step you need to take, especially if you're trying to figure out what to do with certain positions that may be in the money, is do you still want them? Do you still want to own those companies? Has anything changed for that company? You know, so you can look at things like Seeking Alpha, you can look at research, look at the news, see if anything has changed. And if it hasn't, well, then maybe getting assigned is a good thing. I've been hit hard previous years when I had great opportunities and I panicked at the time and I missed some wonderful opportunities. I had an opportunity to pick up Apple in I think in the 120 range. I think Tesla, when it got to around 100, 110, I missed that opportunity. I actually rolled out of being able to get assigned. You know, so keep that in mind. If you still really like these companies and nothing has changed, well, maybe the best course of action is to let them get assigned. Now, if you don't want them, then you have a few other options. You could potentially try to roll them out and down. You know, so if you have a $50 stock, you could look at rolling it out to the next month, maybe going 2 or 3 months out. And you can also, if you've done a vertical put credit spread, you can also look at widening that spread. So if the spread's a $10 spread, which is one of my favorites, or a $5 spread, I think those are the two favorites of most of my members. You could look at doing a $15 spread and go a little farther out and lower the price. And that's what I'm looking at doing with one name in particular, which is Block or Square SQ. And mainly because I already own 200 shares, I'm looking to roll it out and down, maybe right around 40 or 42.50. Is currently I have a position at 45. So I'm looking to roll that out maybe 3 months and lower the strike to closer to 40 or 42.50 and then widen the spread a little bit. And I found that works out quite well. And I won't go out so far that I won't be able to roll it again, because if I need to roll it again below 40, then I would. And you know, say it continues to go down. That's where it's so important, is it a company I still want to own? If it gets below $40 a share and it gets assigned to me, I'd probably be very happy, because it does have really good covered call premium with it too. So, and it's still projecting to do really well the rest of the year and into next year. There's a lot of people who like the Cash App. There's a lot of restaurants. I know they had an outage, I believe it might have been last month or maybe August. And I think part of the reason the outage was upsetting to a lot of people is a lot of people didn't know how to use the systems. They didn't know, if you were a small restaurant and you had an outage, you didn't realize you could change a setting and actually store the credit card transactions to be processed the next time it's online. A lot of them didn't know what to do or how to change those settings, or had never tested, you know, for when the system is down. And I think that's some of the issues why I think it had a little bit more of a sell-off than it needed to. And also the CEO change. So they had that outage, then the CEO left, and that did have a pretty big impact. But I do think they're going to have a turnaround. And so I don't necessarily want more, but if it goes low enough, I'm willing to pick it up at a lower price. And then what I'm finding too are some really good bargains. So, and then to pick up these bargains, and I'll give you one example. You probably can see the few good bargains that I've listed on the screen. Well, over here. One is BKE. I've been trying to pick up BKE for probably 2 years, and it's a great company. I believe it went below 30, or right at 30, which is a 52-week low. It pays over a 4% dividend, but what's really interesting is it's had custom dividends or special dividends, And sometimes those special dividends have been twice to three times the normal dividend. Now, I don't know if they're going to do it this year. They're very wise about their money. So they may put it into opening new stores or, dealing with other things. And they also don't have any debt. But I looked at picking them up. I wanted to pick them up around 32 or 33 last year. So the fact that they're $30, and if I sell a put, I can potentially pick them up at like 28 or 20, 27 or 28. Now, if I'm looking to really own them and they're at a 52-week low, I will take a little bit more risk. So I might do something along the lines of a higher delta, like a 40 delta. To give you, for instance, if it's, 29.50 and I can get it at 29 and I can pick up $1.50 from selling that put, then I probably would do it because the net would be like picking it up for $28, which would be, really good, a real nice price to pick up BKE. So that's one example. And like I said, I will use what I call the wheel. Now, I don't wheel in the same way as a lot of people. I will pick up the stock, and my goal is to own it forever. So I would look at owning it forever. I'll sell covered calls, but I'll sell them high enough that it would never be pulled away from me. And it does have fairly good covered call premium. And then one thing that I did think about, one of the members brought it up. If you have any cash secured puts, one thing you can do to protect yourself, and he was doing it in particular for, again, block or SQ, he was looking at buying some puts long term. I think he was going out 6 or 9 months and buying some puts at a level where he didn't want it to go below. So he had sold the put. It was a cash secured put, but by buying the put, he actually turned it into a vertical put credit spread, so his risk was a lot less. If it ever went below 40, then he was protected by buying that put. He could put it to someone at 40, so his risk, I believe it was around 47.50 at the time. His risk was only that 750. And I think that's a great avenue. And a lot of people will actually do that to protect their portfolio. So say you've been, you have a lot of shares of a particular company. It could be Apple, Oracle, Coca-Cola. Some people will buy puts just to protect their portfolio. Say they almost use it like an insurance policy. So that's something else you can do during these, trying times in the market. Another interesting thing I've tried it a couple of times and it hasn't worked out for me yet is to actually buy calls. So when the market's down this much and a stock is really beaten down, you could potentially buy a call slightly above its current price and do pretty well with it. And you could maybe do it 6 months out. Because I do feel like when we do get a bounce or we do go into a bull market, statistically, usually the first 3 to 4 months of a bull market is huge, meaning it doesn't just go up 5-10%, it'll go up 30-40%, and you could potentially do really well. So instead of spending all that money on the stock, you could buy some calls on some stocks you really want. And even if you just change your mind and the stock still goes up, but you don't want to own it, by buying those calls, they'll be worth even more. So you could sell them at a really good profit if you didn't really, want to have those stocks called away from the person who sold the call. So just another thought process of something you could do, even if you don't have a lot of cash, you could potentially buy some calls. The other important thing that I've been sharing with my membership is during these times when the market drops so much, a lot of your covered calls, because I sell both covered calls, cash secured puts, and vertical put credit spreads, but when the market is gone down so much and some stocks have, are near their 52-week low, it's a great time to actually look at closing a lot of your covered calls. And I've done a lot of that in the last week. I think I've closed 5 or 6 different positions, maybe 8 to 10 contracts, mainly because a lot of these suddenly became very profitable. And Coke's another one that I wanted to talk about. It's way down today. So I need to go back through all my covered calls on Coca-Cola because I could probably close a lot of those. And that's really important because when the market starts to shoot up, and like I said, when it shoots up, it will shoot up quickly. I potentially could sell some covered calls at really good levels at really good premium, so in a way, by closing them now, I'm prepping myself for when we do have either a bounce or a bull market. So again, look at all your positions. Look to see if you have any covered calls that can be closed. Don't just focus on your in the money options. Look at those covered calls and potentially give yourself a bang when we do hit a bounce in the market. So those are, it looks like I listed purchase calls on bargains twice. But that's the key part. I wanted to share with you next a few really good bargains. I'll share with you why I like these companies, why I think they're really good bargains. They're all really close to I think they're all at their 52-week low. So let's jump into the next part of the video. As always, please hit that like button, subscribe. If you're curious about my memberships, details will be below. You can, take a look at my membership. It may be worth your while. I'm doing a number of collections now. I have one collection that I'm working with my son. He's got a small account of around 16,000. I'm teaching him in this series how to actually sell options in his account, and he and I are together and we're doing videos for the membership. Then I also have another one where I actually moved a 401k that was at Fidelity into an IRA, and now I'm selling options in that IRA too. So when you move a 401k to an IRA like I did, you don't always have to liquefy all your positions, but I did. So it's literally all cash currently. So I'm literally funding it now, and again, I'm sharing that as a collection with my memberships. So take a look. It may be worth your time. With that being said, let's jump into the next part of the video. Okay, now I've opened up my research area of my Schwab account, and I'm going to show you, again, these are some of the companies I really like. The first one is Buckle, and this is one I've wanted to own a long time. It's literally right near its 52-week low. I mean, actually, I believe it probably hit its 52-week low today. It's a good company, well reviewed, buy rating by a lot of the different analysts. It has been hit a little bit harder lately. Like here's the dividends. It's over almost 4.27%. It did miss earnings slightly, and I believe earnings compared to last year are down, which isn't surprising. I do think we're kind of in a recession, and I don't think people are shopping as much. But I did want to show you here the dividends. This is really interesting. So here you can see this gray part are the special dividends. So back in 21, they paid almost a $6 special dividend, $5.65. Same thing in 2020, 2019. So literally every year they did a special dividend. They did something interesting for 22. They paid the special dividend in January. So that's why it's being shown here. And I'm wondering, my guess is they will continue. They haven't said they're not going to do special dividends. And they've been increasing even the normal dividend over time. So it's a good company. If it pays the special dividend, it's one of the highest paying dividend companies. And the other thing I like about them is, let's come down here and I'll show you another aspect. This is huge. So they're paying a dividend and they have no debt, which whenever you see that combo, it's a pretty fantastic company. And they have a lot of cash. So just an overall good company. I also like to come over here and look at, Seeking Alpha. I like to look at earnings here because I like how they represent them. So you can see here they're looking to have a pretty good third quarter 24. And in most cases, they've beaten their earnings. I think this is the only time they didn't. But yeah, here their actual is 176 versus 156. 119, they had 124. And if you go back, I think that's pretty standard. They a few times missed it in 23. So, like I said, I think between the end of last year and this year, it's been a little bit hard with the economy. People don't have as much money. I also like to look at any, what the rankings are. So they're buy and hold. So it's funny. A lot of these companies that don't make money and actually don't really, they're almost losing more money. A lot of times Wall Street will love them, but this company making so much money, paying dividends, has no debt. Wall Street doesn't necessarily like them. So these are good articles. You can go in and read the comments, see what people say. And it works out quite well. Let's move this over here. Now, if we go back, another one I like is Zoom. And if you guys have been watching my channel for a while, Zoom is pretty close to its 52-week low. And I really like Zoom at 55.45. So I've sold puts on them for a long time and done probably really well. If they're not my best vertical put credit spread stock to use, they're right up there, with some of the other names I really like Williams Sonoma, which is another company that has no debt and pays a nice dividend. Now they don't pay a dividend, but they do have lots of cash. I think they have something like 6,000 or 6 billion in cash. But here you'll see they also have no debt, and you can see they've been doing quite well. There was a lot of hype about them back during COVID, and they went through the roof. But now they're priced nicely, and it's funny. Again, Wall Street doesn't like them. They're making money, so let's not like them. Plus, the fact that they have no debt just blows my mind. So I could see them being a takeover target because, again, they have so much cash. I could see a company wanting to take them over just to get that 6 billion in cash, and the fact that they're almost like, it's almost like a spigot where they turn it on and the cash just comes out, and so they've even gone through some issues related to the CEO. I think they ousted the CEO and have a new one. And then another one I really like is Corning. Let's see if that'll change. Yeah, here it is. Again, right near its 52-week low. Just unbelievably low. Good company, very consistent. Let's look at their earnings. They pay almost a 4% dividend, and they've increased dividends a long time. I mean, if we take a quick look at dividends, you can see they've been increasing them quite a bit. If you go back and you had invested 10 years ago, they only paid 39 cents. Last year they paid $1. What is that? $1.08, and I think this year they're going to be closer to $1.12. Their coverage ratio is a little lower than I typically like, but it hasn't changed much. It's almost like Coca-Cola that we'll talk about here in a few minutes. Now they did slightly miss earnings recently. 46 versus 45. Their PE, price to earnings, is a little high, but I don't know if that seems correct. Debt, they're not out of control. I think total debt's 69.11. They've been reducing it. Definitely been reducing it since 2020. It looks like they increased it between 2018 and 2019. And total equity, so they have a pretty good debt to equity ratio, which isn't out of hand. It's almost, like 45%, I guess. So again, another really good company at, fireside cheap prices, fireside sale. Now the last one is Coca-Cola, and is if you've been following this channel for a while, one of my favorites. It's also hit a 52-week low, right? It's 52.51. It got down to 52.45 today. I own a lot of it. I actually do have some puts that are now in the money. They were at 55, and it's down big today. I haven't seen any news to talk about what's going on. It looks like an insider sold some shares. So, and then dividend wise, they've paid nearly, and this is one of the higher dividends. But if we come over here, you can see they've also been increasing dividends. I think they've been increasing dividends for 45, 50 years. Their payout ratio is a little bit high, but they've always been like that. If you had bought them back in 2013, the dividend was $1.12. Now it's like $1.38. I know Buffett invested in Coca-Cola, I think in the late 80s. And he says now that his dividends is the almost the same amount of his original investment. So on a yearly basis, he's getting his original investment back from the purchase he made back in the 80s. So again, another company, and it doesn't typically get this low. So and the fact that you could sell puts on it and probably vertical put credit spreads, you could probably do it in the range of probably 50 or 49, like a 50-40 vertical put credit spread, or just a $50 cash secured put. So, very inexpensive. So these were the four companies that I was talking about. I'm actually actively looking at picking up more of Buckle, Corning, and Zoom. Whereas Coca-Cola, I probably won't, but if it gets assigned to me, that's okay, because most of the shares I currently own of Coca-Cola have really low cost basis. So these would have a higher cost basis, which would be a little bit easier to trade. So I may let those get assigned, especially at 55, but I may try to roll them down into the 52.50 range or the 53 range. So that's it. That's what I wanted to share with you. Just the fact that with what we're going through, it's, Buffett likes to make the comment when others are fearful, he likes to buy. I'm of course not using what he says, but long story short, when the market is at these kind of lows and people are very fearful, he likes to buy. And then when the market's way through the roof, he likes to sell. So now's a good time, get out there, look at potentially picking up some of these good names at bargain prices. So thanks for joining me, and look forward to seeing you next time.